The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman. This is the Tiger Technicians Hour, and I'm just waiting to see on Tiger TV just how my chart is coming up. I'm sorry, I had a little problem. I thought everything was resolved. It looked like it was just great work that everybody did in getting everything organized. And I'm going to wait. It'll be a moment, but this is the Tiger Technicians Hour. 877-927-6648 is the number to call. Of course, there was the announcement by the administration that there would be the lifting of tariffs. And am I going to be able to see the chart? Am I going to be able to put it there? I just want to see it is. I'll be able to work it out, I think, if I can actually see it. I don't know what's being shown. And there was this sudden move of 400-500 points to the upside. Then there was a pullback, but now some of the buying has come back, and I want to deal with that right now. It's really important. So I'm not sure. Whatever you were doing early this morning was perfect. All right, then you know what I'm going to do? Dollar weekly. Yes, I thought that's the case. So that's what I needed to do. I'm changing that. I'm getting out of that. I'm going to go to still application. This will be like Larry shows the charts. It'll be fixed. I'll just go like this. You should see them all right now. You should see the left side, right side. That's the left side is the dollar daily. The middle is the weekly. And on the right is the monthly. Let me see if that's come through. Okay. I'll deal with that as long as I know what I'm doing in terms of the application, going through to the den and then going through to live Tiger TV. I'll be able to deal with it. Okay. I'm showing the dollar. I'll do one thing at a time. The dollar is actually having a good session today. And you remember over the last many weeks, I've been talking about this as if to say, treat the dollar as something separate. Treat yields as something separate. That is bonds and yields. Treat gold as something separate. They might at times coincide in direction, but if you think of it in a separate way, separate but equal, let's say, then you have a much better idea of the influence and the magnitude of these really broad, instruments. The dollar is traded throughout the world. It is huge volume. Bonds have together must have 3, 4, 5 times the amount of actual capital invested. Then stocks, you can add anything you want. And as far as so we're looking at the dollar, we're looking at the TLT yields, and we're looking at gold. Gold on a percentage basis now, let me change the chart. I'm going to go to gold right now. I think it's important for me to give a perspective of why I'm looking at what I'm looking at. That makes it, it makes it a tangible, very physical. You're looking at the charts. It's something you can see, and you understand what my thinking is. So yeah, let's go to that. Click. Oh, this is a nice, easy way to do it. I've never done that before. Okay, another fixed chart. We're looking at gold trading at down 3 at 15.13. You see this leg D in the daily chart on the left? What I love to do is I take the outer border and I make a rectangle formation. I did that before. It was very successful right up until we broke out. So that was 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25, 26, 30, 31. On the round about the 32nd day of trading sideways, it broke to the upside. Now we're going to see, and my suspicion is just as we're looking at the market right now, I don't want to talk about Hong Kong, anything else like that. I want to talk about, because gold is part of a reflection of the geopolitical, economic world situation. We're looking at gold having a high of 1546.1 today. This is a continuous contract. There's a chance now that there could be a little pop to the upside. I would not be surprised if over the coming 3 to 7 sessions, that's going into early next week, I would not be surprised to see that gold has maybe popped up a little bit, come back into this, maybe pull back to the 14-period moving average, the black line of 1480.9, let's call it 1480, held above the 1480 level, even if it slips under 1470s for a moment. And then over a period of another 2 weeks after that, we will see if there's going to be a much bigger digestive phase in gold, giving back some of these absolutely spectacular breakout gains. And that's kind of what a lot of the stocks that I was looking at last night, that's what they're representing to me. Fabulous breakouts, really raise the level of support. Okay, enough with that. I want to now go to, we'll go in a fixed chart. We'll go to, let's go start, you'll go back to the Dow, INDU. On the left, let me go click. Okay, on the left is a chart of the Dow with a 400-point gain at 26,297. When you look at the overall spectrum, when you're looking at the left side chart, you say, wait a minute, 27,398 on the 16th, 25,440, a 2,000-point decline to the 7th of August. You know, pretty sharp in a pretty reasonable time frame. And then all of a sudden, a rally that fails, a fabulous rally, going into the high of 25,413. That was on the 9th. Then it pulls back sharply to the 200-period moving average, and then it pops up again. This is the pattern that I would automatically draw, and I actually feel very comfortable about the pattern as of right now. And that is to say that we are forming some kind of a base, that the market is saying, look, I'm going to put it into a little more subtle terms. I'm going to say that the Fed is very clearly suggesting, I just want to type in today's level of resistance at 26,426, just to fill it in to the current level. You won't see that because that's what I'm typing. And what I am looking for is some kind of an arch formation that leads me to the next chart in the middle. That is the weekly chart. And this weekly chart is suggesting by the low that was made at 25,440 last week, I'm going to type that in, 25,440, that there is a really, really good chance that we've made a peak E of some significance in the weekly chart, going straight to the Chapman wave inside track. Remember the technique that I developed years ago, where you got a little inside channel. It's a rising channel or a falling channel. And as the price keeps going back into that, that's where it gets repelled. That's one of the reasons why I said to subscribers when we went short at 7 points off the top, the all-time high of the Dow, the high was 27,398, 27,391 is where we actually went short, and then we added to the short position. One of the reasons was that the weekly chart was suggesting by its pattern that there could be, talking about this particular chart, I'll have to find another way. It's called an M formation, but it's really like a camel. You know, some camels have a double hump. So this is that extra hump, and then that's the one that says a very sharp pullback afterwards. Well, we've got it with the MACD expanding. I'm going to do a little circle here. Next time I come back to the Dow chart, I'll show you. But just think of this, the MACD, this is intra-week, so I don't know what the Friday close is going to be. But just as of now, I can circle this to say that the fast-moving average, the green line, has gone under the slow-moving average, the 26-period moving average in the weekly chart. Stochastic has gone under 80%, so it's a 72%. Everything is suggesting a sideways consolidation. That's really what I want to emphasize. I'll be back. Basil Chapman, Tiger Conditions Hour. That's a 424. We'll be right back. Talk about the trend.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi everyone, we're back. Basil Chapman, Dow's at 444. I am impressed at the rally, the speed of the rally, the pullback, and the surge of buying that has come. It isn't just short covering. This seems to me to be a little bit better. So this is very early in the day. This is 20 or something, noontime, just after noon, Eastern time. Anything can happen. But the fact that we didn't just pop once and then start to slide, and now we should only be up 220 if there was going to be a failure. Rather, we're up 442. That to me is impressive. Now, this is what I need to do. In the Chapman Wave methodology, you see, we had that very sharp pullback from the peak E top that was made at 27,398 in the Dow. Then there was the Chapman Wave silent doji following that special technique. I once did a webinar on that. It's a technique I developed. It's just, it's like if you had to scan, it would be very difficult to say scan with all the different types of dojis and then give a specific day before, day on, day after of a reversal. It gets cumbersome. It gives you just too much information. But in this particular case, it worked really well, and it confirmed with that big failure candle of the week. I think that was August of the 1st. Yeah, August the 2nd, the week of the 2nd, where it plummeted from the 27,281 level to 26,248, 1,000 points just in that week alone. That says to me that I got to call this a new gray A. What does that mean in the Chapman Wave methodology? It means that you've made a low of some consequences. It also means that this rally is just a rally going up against the Grand Canyon left side precipice that we came down. It doesn't give, the MACD is still negative. The stochastic's under 80%. The price is still under the 26,400, is that 60 or 80? 26,463 14-period exponential moving average in the weekly chart. So until we can really break sharply above the 9-period moving average, the green one at 26,560s, I just have to call this a really good retracement. But what it is saying is that there is enough between the Fed, which it just seems to me that the whole area of 26,000 to 25,200 is an area that, from the little history that we've got, it seems that's the area where the Fed gets the most nervous and wants to start putting money back into the market. I have no evidence. I'm just saying that that's kind of what I'm looking at based on the 200-period moving average of 25,850. We've been, in fact, out of the 1, 2, 3, 4, 5, 6, 7. This is unbelievable. Out of the 7 sessions ranging between 26,400s and 25,400s, we've hit the 200-period, the orange 200-period exponential moving average 5 out of the 7 times. Is that not trying to form some kind of a base? It just says real simple. If you go on, if the Dow goes under 25,000, let me make it 25,300 at any point, that actually starts a whole new basing formula. So far, this is going to be good. I like what I'm seeing right now. I like the fact that one of our stocks that had a very tight stop from when we got in the other day, it moved very nicely up, pulled back pretty reasonably with a very sharp decline over the last couple of days in the Dow, and then today held the stop that we had and rallied very strongly. It's in an area that says to me, and I'm going to be giving a webinar on this, what areas are looking good for the next basing period to see a move in the Dow that really reflects perhaps fresh buying in areas and perhaps old buying in areas that were good, that have really been taken to the woodshed. I mean, there's some of the, look at the square. I haven't even looked at it today, but I'm going to try to get there in a moment. I'll go there. I'll post it in a moment. Square trading right now down. No, it's up 40 cents. But look at this. Well, let me finish this chart here. I'm going to put my peak D in, and then I'm going to put a down arrow. And now you'll see Square. It seems to. It's not my area of expertise at all. But what it does seem to be in an area that is in demand, has a good product, had a fantastic move. I'll get to the chart in a moment. Hold on. I just wanted to finish the notation. There we go. And now I'm going to grab the picture camera. Got it. Okay. And if you can see it, look at this. Square goes to a high of 82.66 on the 12th of July, pulls back at a cup formation. I think it had some kind of news coming out that's right, it hit 80 round number high. Let me just type this in. 80 round number high. And then what does it do? It comes out with earnings the same day. That's on the 1st of August. That evening, I think it came out with earnings. Kaboom. It goes down to 67.25, not good enough. Remember, I have a rule about gaps, huge gaps on the downside. I have a rule on the upside as well, but we're talking about the downside right now, which says if the bar after the gap does not take out the low bar of that gap down bar, but in fact starts to move higher and within 3 sessions has actually taken out the gap down high, it says, great, the low that was made is something of great importance, and there's a chance that if it doesn't take out that low within 5 to 8 sessions, you've made a low that says you could try to fill the gap before you really come back to do testing. That's a very big positive for something that got smashed to the downside. It means that if you weren't able to get out, you've now got a chance at a higher price, but you still better think of lightening up. Okay. But the other one is, if the following bar takes out the low, especially if it gaps down, and then rallies and can't get back to that bar at all, and in this case, the gap down bar was on the 2nd of August, 70.81 high, 67.25 low, and it's trading right now at 62.63, trying its best to try to make a little bit of a rally here. This is not good news, and it's got this huge Eiffel Tower in the weekly, goes straight up, goes to peak D. So it's got D in the daily, D in the weekly. Peak F was made at 101.15. I mean, this is a stock that goes from the teens back in 2017, just like the 17 was in the teens. It was in the 17s at that point, and it rallies to 101.15 October of 2018, smashes down to 50, rallies sharply to the most recent high of 80. Wait a minute, that has to be higher than 80. I did something wrong. It was 80 low. It was 83.20. It was 83.20 was the high with a round number low that day. I love to look at these round numbers with 80 round number low, that particular session. And that was a clue to say, be careful, because if we take out 80, that becomes resistance. And if we don't even get close to 80, that's a very negative thing. So 83.23. And now it's trading at 62.67. So there are stocks that are starting to at least attempt to make some kind of a base after being absolutely spectacular. I think someone said Cisco's coming out with earnings. I'm not sure when Cisco's coming out with earnings. CSCO, anybody there in the den can help me? Cisco coming out with earnings when? Cisco makes a peak D after a doji candle. That was back in mid-July, around about 58. Plummets down to 51, trading at 52 right now. Peak E in the weekly and peak D in the monthly. You can see what I'm saying. I don't think we're going to get carried away to the upside, but it's really good that we're forming a base of support. I'll be right back. Down at 443.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi everyone, Basil Chapman. I'm showing the chart of Cisco. I just want to show you something that, to me, says, hold on. Rallies like this are important, but think of it within a rectangle formation that we're stuck in the range. We're going to go to the upper part of the range, and we're going to go down to the lower part of the range. All of this is really important to at least my thinking, what we have, why we have it, and why I'm looking at certain areas that I've had webinars on before, and I still particularly like them. And we're trying to deal with it in my newsletter, the opening call. So far, some of it's been very successful. Others are experimental, like we haven't touched the MJ, the alternative harvest of the cannabis area for a long time. I'm waiting. It's going to be ready, but it's not ripe yet. That is the stock market. It might have been around for thousands and thousands of years, but on the stock market, it's a whole new beast. 58.23 was the high of August the 15th in Cisco, and it pulls back very sharply, holds the 200-period moving average, hangs around there, has the 9-period pink 9-period moving average resistance. The 14-period at 53.74 will be a little breakout to the upside. I suspect that the weekly chart sell mode is actually in a sell signal to sell mode already. Tells me that it's got time on its side before it comes back. What a spect! Old is new again, and new is going to be old for a little while longer. Look at, you can't see it because I have the chart. I'm doing it by tomorrow. I'm sure I'll have everything back again. But the old high of Cisco was back in March of 2000 at, round number 82. Talk about 82. Is that right? How can that be? It's way up there. That can't be 82. 82? We've moved on. We're in Cisco now. The 82 was a round number high. I think it's actually been changed. It's been split. It was split just after the turn down. And then it went from 82 down to a low in 2002, October, of $8.12, 90% correction, unbelievable. And then it rallies back. It's had a whole series of moves to the upside, finally gets back to the three-quarter point level, and it goes to, what was the high? 58.23 made just recently. So old has become new again. Microsoft, same chart, big cup formation. The semiconductors, big cup formation. It's amazing how it took 20 years for 18, 17, 18, 19 years to come back again. But I suspect we must not write these guys off, but they are on a shorter term basis, short to maybe intermediate term, taking a really well-deserved rest. That's Cisco trading right now at 52.78, up $1.24. I said that I would go to the TLT. Let me do this. Let me just pop the TLT here. I want to show. Oh, what a pity! I need to do this live, but I'll show you the chart in the meantime. Let me go click, and you'll get this in the den, and you'll see it on Tiger TV. I hope you will see it, and that is the TLT, which is the Lehman 20-year Treasury bond ETF. Funny, we still say Lehman. Lehman hasn't been around for like 11 years. Okay, so at 142.70, down 27 cents today. This is a leg. I'm calling it a leg E. There's no other way, nothing else I can call it. The MACD is very strong. The stochastic is good. It was much better, but now it's at 82%. Still good. The on-balance volume is turning down a little bit with an M-shaped pattern. And the weekly chart has had a really, I need to show this. It's to the week almost that it did this beautiful, how am I going to show that? All right, it doesn't matter. It has gone back to the 143, today's high of 143.91. It's just a couple of cents higher than the high that was made back in July of 2016. This is now just over 3 years and a month, over the 143.62 last major peak that it made before dropping down to the 116s, running to the 139s, pulling back to the most recent low. I had that written in there is 111.90 back in November of 2018. And then it rallies to 143 today. I mean, that is spectacular. You would not believe, I mean, years ago, I'm talking maybe 10, 12 years ago, if I said to anyone, can you imagine if yields had to trade like stocks, if they had to trade like high-tech stocks, they'd say, oh, come on. I mean, the last time we saw that was back in 1981, 82, 83. Surely not. Yeah, this is back to those levels. So don't ignore big moves in the yields. But right now, it looks to me like we're getting a little toppy in the TLT. So some bottom. Let me see if I can do this on the TNX. TNX. It's probably better to go to the TBT. I'll go to the TNX. Yeah, the TNX is just trying to establish at 1.60, 16.00, it's trying to establish at least a little bit of a base in which to bounce. But I think that this international, you see, this is what I meant about those three prongs you got to look at. Yields are subject to the international wave. It's not a wave. It's not a torrent. It's not a, what did they just have in India? In fact, they just had, I think, Larry had mentioned it, that they had it down in Arizona. Not a tsunami, but huge wave of rain, torrential rains. And that's what you're looking at in yields, because all the countries are being forced to raise cash, sell bonds, and those bonds are making the yields lower and lower and lower. It is an international phenomenon. The United States is going to be subject to that. It's usually the United States market is really the precursor. If it's going up, it helps other indices throughout the world. If it's going down, it hurts the others. But in this case, I think that the United States is being challenged. It's being chased and forced to look at low yields. All right, that's that. Now, the next thing we want to look at is crude oil. Crude oil at this particular point is trading. It was up earlier this morning. Now it's up a little bit more. Now it's up much more. Now it's up a lot. It's up at 230. It's hitting that trend line. Oh, you got to see this. Let me show you this. I type in, first of all, the low is 50.52 on the continuous contract just a week ago. 50 point, I think I said 52. And now I'm going to show you the chart. Here we go. Click. And look at this left side chart. Shows a beautiful arch formation. Oh, I should have brought this arch right around. Did that a little too quickly to post. If I was doing it live now, you'd see exactly what I'm doing. There it goes. So what I'm doing is I'm grabbing this particular ellipse or arch, bringing it down. We went to a lower low than the low that was made back in May, around about 50, what was that? I think it was about 51, 51.10. On the 12th of June, it was June. And it goes all the way up to 61.08, comes back in an arch formation, goes to a low and goes to 50.52. And now it's had a really strong rally to the downtrend line, dash downtrend resistance line, and moving to the 57.20 into the 58 SPY. The next 2 days, we say, wow, that is really good, because the 200 period moving average is up at 59.06. 59.06 is crude oil, right? So we're trading at 57.21. That's a big move, another almost 2 points. But look at the weekly chart. It had the dreaded H. Remember the pattern we call the dreaded H, lowercase h. Test the left side low successfully. It can rally where? To the one of the moving averages of importance, or the previous peak. And the previous peak would be right here, 58.82. the week of the 2nd of August. So this is a good move in the crude oil, and I do like crude oil running a little bit here. I think it's a good market prognosticator. I'll be right back. Basil Chapman, Tiger Admissions Hour. Dow's up 404 points. We'll be right back.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the Tax Opportunity Zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year, or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year, or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
It's amazing to think that Tom O'Brien started his weekly gold report 17 years ago, with the first issue published April 7th, 2002, when gold was trading at under $300 per ounce. Gold peaked at more than $1,900 in 2011, and after spending many years consolidating at lower prices, gold may be poised for its next big run. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, South African rand, as well as 25 different mining equities with specific buy-sell recommendations. As of April 1st of this year, the Gold Report currently has 8 active positions with an average unrealized profit of almost 8% for each open trade. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your Gold Report subscription today, visit the front page of TFNN.com. Don't let gold's next big run pass you by. Sign up today. Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Hi, folks. So we're looking at the E-mini up 50. I'm going to try to show this chart right now. As you know, I got a new computer system, and it takes a little while to get everything set up the way it was before, if you can ever get it from the way I can't get it before because I moved from Windows from some prehistoric, I think it was a Microsoft, yeah, to something, to Windows 10, yeah, to Windows 10. So there were a lot of changes that were made automatically. Let me just do this. I'm going to show this chart right now, and a number of you always say, we just want to look at the patterns. We're not looking as if it was a trade. Yes, it's made a second peak E in the 2-minute chart. The first one was at about 10:30 when it spiraled up to the 2944.25 level. Unbelievable. I mean, but look at this. Oh, I can't show you because you're looking at fixed charts. But just shortly before that, it was down in the doldrums. It was on the 200-period moving average of the 2-minute chart in the 2875 area. I mean, 50 points, that's amazing. All right, so then it pulls back to the 2918. So now it's up at, it hit 2020, I think it was 37, 2937, now it's trading at 2929. So I think this is all part of the package. And not only that, there's a little bit of the wolf aspect that you got to start putting into the puzzle now. I think the market is going to start getting a little tired of this. And it's going to say, hey, you know what? We want actual tangible results. We don't want to, we want something a little bit more concrete because this could change on a dime, or should we say on a 10% rule. So that's my impression. All right. So now what I want to do is just real quickly, I'll do this. I'm going to ask the question. I had, so many emails coming in. I need to think this through clearly because my whole modus operandi here has changed because of what we've got today. So, peeking in the den, I'll answer you in a moment. Let me just do this because I want you to look at how the IYT, the relationship of the transports, which is really important because it covers airlines, it covers truckers, it covers rails. It's just really important to get a sense of how the economy is doing through something like the transportation index. And when we'll look at this, it's up, 2.87, up 1.59%. Like most of the market, it's up in that 1.5% area. And up to 87 at 183.52, hey, it's still in this lower area and the low of 179. So this is going to be the low of the 5th of August. Wow, we take that out, and that 172, 200-period moving average, it's going to flash to say, look at me, I'm becoming a magnet. You go to 178, that 172 level is going to beckon. So this is really an important moment. I want to see by the end of the week, another 3.5 trading days, I want to see the 189s, 187s hit. That's another 4 points higher. But you've gone 2 3/4 points today. Surely another 4 points shouldn't be a big deal if this is going to be a breakout to help the upside activity. I just think this is going to be real tough to do. So I'm not really changing my mind right now to say that I think that the weekly chart is suggesting there's going to be a lot more consolidation in time. But that whole area, certainly in the Dow, I'll give you the S&P, the Dow, the whole 26,000 to 25,000, let's say 400 area. In the S&P, it's this entire area that we were most recently in. I'll go to it right now, and I'll show you something that I think is kind of important at this point. Let me just finish it up so that I can give you the numbers here. This is gray peak A, gray leg B. Remember, it's gray because it's way under the previous high, and the technicals haven't even turned around yet. It could recycle. It could recycle to a brand new buy signal with the buying mode. Hasn't done that yet. So the S&P, here we go. I need to just put this in as an A in the weekly chart, and I also need to put the price in. Oh, I don't have it, so let me just do that right now. I did have it, but it got erased. 282212. That was the low. 282212, and that was the low of. What was the date? The low of the 5th of August. I should remember that, surely. Okay, so that's 8.5. Okay, so what we're looking at is this is a fantastic move, 28.22 to today's high of 29.43. Don't tell me that 120-point move in the S&P cash isn't a big move. It is a big move, but it's only just over the 14-period moving average, and the weekly chart still suggests this is a peak E of some consequence, at least in time, if not in price. So with that said, let me flash this. Let me just give you the picture right now. Click. Here it comes. This is the S&P daily, weekly, and the right is the monthly. I haven't even mentioned the monthly yet. I prefer, since it's only the 13th, I prefer to wait a couple of days. Let's get to mid-month. Let's get closer to Friday, and then I want to talk about the monthly charts, because so far they're holding pretty darn well. The S&P broke the 9-period moving average support, but held above the 28.17 14-period exponential moving average weekly, and for the first time, you're starting to see a chance that the MACD could cross positive. It's still 0.22 down, but it's really close to attempting a positive move to the upside, and stochastic is strong at 88%, and that's the reason why I'm saying I think we're looking more at time than price in this consolidation. These tweets, to have gotten the 400 or 500 point rally that we got, the 40 to 50 something point rally in the S&P, without this breach of well, it wasn't breach, it was an acknowledgement of some progress with the China-US trade talks. Without that, there's no way we would have got anything but a bounce of about 120 points, maybe 140, and then pull back by the end of the day. So this is important because it keeps saying that you're using up time, you're usurping energy and time, but not price in this correction from the highs that were made in the S&P's case of 3,027, around about the 26th of August. So this to me is all very important information that we've got to digest, and at the same time we want to be looking at stocks like where can I go for this particular example that I want to use? Since I'm not doing it live, I have to show it to you per chart. Let's go to if I can, let me just see what UTX is doing here. Yeah, I'll talk about it rather than show it, because what I do want to show then is the XLI, which is the XLI is the, here we go, XLI.X.
You've reached 90.
This, in fact, is the, there we go. Oh, XLI, there we go. Okay, the XLI is the one that really is the pure industrial. So I shouldn't say pure, even that isn't pure industrials, because the Dow is called the industrials, but they have just like a handful of what stocks you can call in, like Boeing, that you can call an industrial. But the industrial S&P Select Industrial Spider Fund trading at 75.57, up $1.19. Let's say S&P's up 1.65, and this is up 1.61%. That's percentage, and up 1.61%. So it's kind of in line. The Dow is up 1.64%. So this is a little bit behind the Dow itself. But this is, I think, more reflective of what we're looking at. And this is suggesting it didn't make all-time highs. It hasn't even hit this downtrend line in the monthly chart. That, to me, is more representative. And that says we've got to still be somewhat careful here and very selective. And that's what we're trying to do for my subscribers to my opening call. Be very selective.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
Hi, everyone. We're back. So just in this little wrap-up here, let me do a couple of things. Let me just tell you exactly what I'm looking at. Let me just go to this chart right here. This is the 120-minute chart Dow. Here we go. Oh, that's interesting. I had it. 1, 2, 3, 4, 5, 6. So what we're looking at here, I'm going to just give a quick screenshot for it. Here's the screenshot. This is current right now, trading at 26,316, up 418. We actually got, you would never have thought from the arch formation that was developing in the 120-minute chart of the Dow that there would be in an hour. There'd be from the opening, or maybe an hour and a half, from the opening, there'd be a spiral to a leg D. Well, we did that. 26,426 is the high today so far, and it went to a leg D. And now what I'm going to do is I'm going to take this chart. Oh, I just did a fixed thing, so I'll have to do it again. And I'm going to show you what I'm suggesting, that there's a chance that this whole thing becomes an arch with another pullback, but maybe we don't have to hit the 25,824 level that we hit yesterday. In fact, we hold a little bit higher and then make another arch formation. So let me show you the chart. There was an automatic Chapman wave 26,375 resistance level. We went above it, obviously, at 26,426. We're now at 26,309. We're way below it. The MACD is making a little M formation. The stochastic is still very weak at 43%. 26,140 is the really important level for the next 2 days on any pullback, and a close above 26,646. Is that a 5? I'm sorry. 26,546 would be above the 200-period moving average. That's going to be very strong resistance. I suggest we're still in a trading band where the speed is moving quicker and quicker and quicker. We saw that today. But wait a minute. Yesterday it took 4 bars to get from the 26,413 26,411 area down to the low of 25,824. It took a shorter time to go up, so now maybe we can have some consolidation. Handing you over to Steve Rhodes, then you've got Steve Rhodes, you've got, let me see, Dave White, you've got Tom O'Brien. I believe I'll be back on with Tom a little later on. I hope I can resolve some of these problems before that. I'll be back. Have a great day, and check out my opening call. I think you'll find it fascinating and hopefully profitable.